Hello, Real Vision people. This is Sebastian Moonjava, and today I have Thomas Walton-Pocock. He is the CEO of Aztec Protocol. I'm glad to have you here, Thomas. How you doing?
Very well. Thanks for having me, Sebastian.
So first, let's start off hearing a little bit about your background and how you got into the crypto space in the first place.
Yeah, thanks. So my background, originally I trained, studied maths at university, spent quite a lot of time studying some algebra, which it turns out has been very useful 10 years later. I'll explain a bit about that later on. And I had a brief skirmish with the world of music, classical music, before spending time in the financial industry. I kind of my last role there, which was kind of most of the time I spent in finance, was in the private debt world. So this is the kind of the shadow banking industry, and again, a useful background for coming into crypto as we're thinking about how to disseminate lending practices and decentralized lending practices. There's a sort of decentralization that had been going on for quite a while in the shadow banking industry. And I decided more or less the day I qualified, to go and initially to try and set up a loan syndication platform that brought the clearing benefits, the atomic swap clearing benefits of public blockchains to the private capital market. So that was the original thesis of the company. And I teamed up with Zach Williamson, who's my co-founder at Aztec. And we joined an accelerator operating out of a biscuit factory in London, just south of the river. And over the time that we spent there, we had started building this credit issuance platform designed to be syndicating debt onto Ethereum and then having it trade, and realized that all the guarantees we could be given, or that we could give our users around, around data availability, around guarantee of settlement that Ethereum could bring, came at a very heavy price, which was privacy. And so we started to spend time focusing on how we could bring cryptography to Ethereum in such a way that we could scale Ethereum, but at the same time bring privacy to the user. And that's how Aztec was born. So we decided to pivot to privacy only at the end of 2018. I've been working on that for just over 2 years now.
That's great. Can you, for our audience, can you explain a little bit more about the shadow banking? What does that mean? I'm actually not super familiar with this language, and does it have anything to do with privacy?
Right. So, to some extent, there are some privacy benefits brought by the shadow banking industry. So what's happening increasingly is that commercial banks have found that the rules governing them, the Basel rules, require that they write up or down certain types of assets, and by holding these assets, in particular the ones I'm talking about are private loans. Typically they might be anything from, let's say, $250 million of debt right the way up to the billions of dollars per company. And companies like to use these debt markets, sometimes because they're cheaper, and sometimes because actually they don't have to reveal a load of their financials that they don't want to reveal. So there's a privacy aspect to these markets. Anyway, the banks found over the past, let's say, 20 to 30 years that they couldn't always hold these loans on balance sheet. And so they started to find other takers for these loans, which initially was pension funds, and then the birth of private debt funds. I think really your side of the pond did this quite faster than my side of the pond. The US really were a full credit cycle ahead of Europe in making this loans industry go towards kind of institutional or specialist funds who would invest this stuff. But we've got this sort of booming private debt market in the UK and Europe, and so yes. So now typically the way that the banks are financing this is maybe through a leverage facility they give to a fund, and that fund is then onward investing into these mid to large cap companies.
I see. So, and then you said your team decided that you wanted to build on top of Ethereum. You said, oh, Ethereum looks pretty exciting and interesting, but there's like a kind of a flaw here in that it's all public. It's all public data. And so you're trying to tackle that problem. Is this the problem that Aztec is solving, is the privacy problem? And if that's the case, can you talk to me a little bit about why you see privacy to be important, especially on blockchain? Because it's almost like a paradox here. When people think of blockchain, they think of transparent, they think public, they think easily, highly auditable. So talk to me a little bit about why you decided to make that decision and the use and importance of privacy for Ethereum.
Right. I mean, so obviously we had actually in some ways found the first use case because we were the first use case in this credit issuance market. You could not have the terms, the amounts of debt, the details around that debt being broadcast to the market. So we'd already found a first use case. But after thinking about it for a while, we realized actually if we can scale this technology, which back then we couldn't, by the way, it's every time you do anything on Ethereum, it's colossally expensive. You're paying gas, as you know, you're paying gas to a large army of miners who are validating every single transaction. The logic that historically the banking system, payment systems have done has to be replicated by hundreds of thousands of nodes all around the world, often with very limited computer power. And that's why there's this kind of lack of supply of computing power available on public blockchains at the moment. But we thought, look, if we can actually make some breakthroughs here and we can scale this privacy, then we can actually move down the sizes of transactions from the hundreds of millions of dollars worth of loans trading who don't care at all about gas costs because it's cheap for them. It's $10 here, $20 there. But if we can get those costs of doing business on Ethereum down, we can then build the Visa, MasterCard of programmable payments based on the capital sources appearing on Ethereum. Now, back then, those capital sources looked very much like sort of stable coins backed by deposits. But obviously, in the past, particularly in the past 18 months, we have seen an explosion in the way that borrowing and lending systems happen on Ethereum. And we've now got this very functional new decentralized capital base on which we can go and build a programmable payment system. So to some extent, even the capital base that promised to be able to deliver a global settlements network for the world wasn't even there when we started. In some ways, we were slightly we were sort of expecting that to come, but it wasn't there yet. Now it's there, and we're working tooth and nail to make this privacy faster. What I should say is, in terms of why is privacy, we know why it's important. If you send some money to someone else, whether it's a merchant, whether it's an exchange, they can see your entire financial history completely transparently on Ethereum right now, and they of course then can onward sell the data. So we're going to get to an inflection point pretty soon where there is going to be a large number of corporates who have managed to attach names to addresses. You also see the growth of people like Nance and June Analytics. They're able to tag addresses with exactly who you are. They can see your entire crypto holdings, every trade that you've done, if you've done this across decentralized exchanges. That's going to be an enormous problem for your personal security, for your data, and people will be able to monetize that data onwards. So the real challenge for us is not only does Ethereum not scale currently particularly well in the public setting, but when you then go to private transactions, the amount of additional computation that has to be validated to make these transactions validatable by Ethereum. Ethereum checks, if I have $10, I sent you $7, keep 3 out of the balance. Ethereum is now having to examine not public numbers, which are very easy to check. I can do that some really, really easily. But if they're encrypted, then the amount of logic that has to be provided around those encrypted numbers is incredibly circuitous. It's an enormous amount, often the amount of data, amount of computation that needs to be checked. And so we're trying to scale Ethereum whilst also dealing with these amplified computational challenges. And so that's really what has faced Aztec in terms of R&D until this point.
Hey, if you like this clip, be sure to like and subscribe for more crypto-related content. Also, be sure to check out the full interview and more only on realvision.com/crypto.